Hey guys, what's up? I'm Adam. This has been an interesting year so far. I know people that have been getting their butt kicked. I know people kicking butt. I know people whose profit has completely plateaued. And you know what? Things are about to get even more interesting. Today I'm going to talk about some solid plays that you have got to pay attention to. So let's hop right into it. So let's talk about green tech. Green tech is a sector that deserves a lot of attention because there is a 2.3 trillion infrastructure plan working its way through Congress. And finding a good deal in green tech right now is pretty feasible, and it's going to set you up very nicely from now towards the end of the year. Moving on to EV and specifically charging stations, ChargePoint, ticker symbol CHPT, is a definite buy at this time. And yes, I know it's charging its way up, no pun intended. I still think under $30 it's an absolute buy. ChargePoint is the largest charging station provider in the United States, and Biden literally wants to build 500,000 EV charging stations, and that's about 4 times the number of US gas stations, which is insanely ambitious, and that's not going to happen. But even if he built a quarter of that number, that's still incredibly bullish in my honest opinion. But charging stations will be made more accessible. They will be found in more locations, so yes, I do believe the amount of charging stations is going to exponentially increase. And it has to, because the current infrastructure cannot support the amount of electric vehicles coming to market over the next 5 to 10 years. So I believe ChargePoint will exponentially benefit because they are the largest charging station provider, and they are the most likely candidate to get the job done. An interesting note is that ChargePoint found that EV customers at retail stores stay at stores an average of 50 minutes longer than the average customers and spend an average of $1 per minute. Now consider that, because that means that US retail stores have a huge incentive to put a charging station in their parking lot. Customers will spend more time and more money, and they'll probably get some government subsidies for installing charging stations. Another Biden proposal is going to make school buses go all electric. So that brings us to Proterra, which is merging with ACTC. Biden actually took a virtual tour of the Proterra factory in South Carolina last week. But the problem with this stock is that SPACs as a whole have been getting absolutely obliterated. And you either need to have an extremely long outlook if you get into these and be patient, or you should just day trade. And the thing is we're waiting on the SEC to provide some clear guidance for how SPACs are going to be regulated. And quite frankly, the rate of SPACs that sprung up over the past year does raise a bit of an alarm. And sure, there are regulations, but it was never super clear. And when these are known, I do expect to see bounces in the legitimate SPACs, not the shady SPACs, because that's why we need regulation. There were a good amount of really shady SPACs that sprung up over the past year. Now, moving on, last week we saw some pretty substantial dips in Bitcoin. But over the past few days, Bitcoin has claimed support, and I actually believe we're seeing Bitcoin gain some strength and resilience. You have to remember that Bitcoin has a substantial amount of institutional support, and it maintains stability throughout this trading range that it's been trading in currently. That being said, minor plays like Mara and Riot should not be ruled out. I think these are actually good swing plays. They're both trading below their past rips, and when these stocks move, these stocks will rip again. And as Bitcoin continues to gain steam, I do believe we will actually see these trading above their previous highs, especially when Bitcoin apparently gets to 100,000 by the end of the summer. And there are a lot of analysts that think that is going to happen. Now, here's something kind of funny. So on April 22nd, the same day that news came out about Biden increasing the capital gains tax, Andrew Fisher was on Twitter saying, Yellen to propose capital gains tax as high as 80% for crypto trading. Heard on street. Guys, this was a joke, yet some of you used it as a petty way to raise alarm for a nothing burger. And what's even stupider is a writer for Bloomberg had also quoted Fisher to only retract it a few days later as, of course, reality set in. But what the heck? Now, before I get to my other plays, I want to talk about something because a lot of you seem to not actually know this about Yellen, and I want you to. So it's important to know that Yellen actually supports crypto. And while I'm sure we can expect some regulation to come in the next few months, regulation will most likely invite more mainstream investors. There are still a crap load of people that do not trust cryptocurrency. But Yellen was quoted in January saying, I think it is important we consider the benefits of cryptocurrencies and other digital assets and the potential they have to improve the efficiency of the financial system. And guys, she's right. Blockchain technology is not susceptible to fraud like normal banking. Let me explain. So, a blockchain is a type of distributed digital ledger containing transaction data that is shared across a peer to peer network and continually reconciled. There is no central administrator or centralized version, so there is no single point of failure. Instead, management and authorization is spread across the network, so there's no obvious place for someone to instigate a fraud scheme. Simply stated, blockchain technology is the future. So it's bonkers to think that crypto isn't going to be woven into our lives for decades to come. Now let's move on and talk about a sector that has really cooled off a lot since Biden was elected. The next play I'm going to discuss has an extremely high potential. Now it's important to note that cannabis companies across the USA are expanding rapidly ahead of moves by Congress to legalize weed. In early April, Senator Schumer was quoted by Politico saying, "I am personally for legalization, and the bill that we will be introducing is headed in that direction." Matt Gaetz, a Republican congressman, was also quoted earlier this year saying that he will vote yes on a bill to legalize cannabis federally. This is big stuff. I personally think that the Canadian cannabis company Tilray, ticker symbol TLRY, which is merging with the Canadian cannabis company Aphria, is actually a good swing. But I don't want to fail to mention that cannabis revenue actually plunged by nearly 1/4 quarter over quarter. So why would I even recommend a stock like Tilray? And that's pretty simple. See, in the US, cannabis sales hit a record 17.5 billion as Americans consumed more weed than ever before. But in Canada, it's a different story. In Canada, they experienced their slowest year-over-year growth for cannabis, but the problem is that the decrease in sales was undoubtedly fueled by Canada's insane lockdown policies. In Ontario, which is the largest province of Canada, stores have been closed since December, but in previous months, an increase in the number of stores as well as falling prices were boosting sales. So if you toss aside what the pandemic has done to Canada, you can see that growth isn't stalling because interest is going away. People couldn't actually access the product. Analysts also seem to be missing that Tilray recently reported its 2020 earnings. They showed they were able to achieve EBITDA profits, that is, earnings before interest, taxes, depreciation, and amortization. It made $2.2 million in adjusted EBITDA in Q4 on $56.6 million in revenue. Moreover, although the net loss was $3 million, the company has converted enough of its notes into equity so as to reduce interest costs by $9.2 million. Guys, there is a high likelihood the company will be net income profitable this year. And as pandemic restrictions loosen, and hopefully they do, sales should soar again. And I really have no doubts that the cannabis sector as a whole is going to heat up. We should see some pretty good bounces. So be sure to keep an eye on other stocks like CGC or ACB as things heat up. The final stock I want to discuss is probably one of the best candidates for a short squeeze. I'm talking about the stock Discovery Inc., ticker symbol DISCA. And what's important to note, as GS Analytics writes, before Discovery Plus launched, analysts and investors were characterizing Discovery as a company in secular decline, with linear television subscribers cutting cords and moving to OTT platforms. They were skeptical of the company's ability to attract subscribers on its DTC platform and were questioning whether customers will pay for Discovery's content versus the already existing players like Netflix. The successful launch of Discovery Plus has proved the bear thesis absolutely wrong. The company gained 7 million new DTC paid subscribers in January and February. Discovery Plus is likely to have higher margins and a lower break-even point given its leadership position in non-scripted content. GS Analytics believes low valuations, high short interest, and a successful pivot to the Discovery Plus platform gives the stock significant upside, and because of this, we're bound to see a good amount of retail traders discussing this stock in the weeks or months ahead, otherwise known as retail activism. Well guys, that is all I have for you guys today, and I hope these plays really help you. Just remember, a like and a subscribe helps me. Thank you so much for watching, and I will be back with more. Take care.